So hey guys, really pepped up for this exciting multi-chain DeFi panel. So I think why don't we start with you, Pat? Maybe a quick intro, you, your project, your role in the project, each of you. Yeah.
Amazing. Thanks, Noah. Patrick Kearney, running growth and marketing at Relay Protocol. Fast, easy, cross-chain interop effectively, same chain swaps. Really just trying to make the UX on the front end easier for users and also empower, a lot of our different partners, aggregators, chains, et cetera, to make sure that they are able to have the best kind of interoperability across the space as possible.
Hi, Philip, Chief Product Officer at Flare. So Flare is a layer 1 EVM chain, nothing special, except that we try to bridge this final piece of things, which is data, to bring it on-chain. And as it turns out, it's not that simple, and the devil's not even in the details, but even at a high level. And that's what we're doing. So making sure that all the technical details of getting whatever data you need are on, and hoping that this works.
Hi, I'm Tomer. I lead product at the Stellar Development Foundation. Stellar is an L1 blockchain, been around since 2014, really focused on real-world utility and equitable access.
Mark, director at the Peace Data Association, Pith, Universal Price Layer, Oracle, 1,500 price feeds available on 100 chain.
Awesome. Nice and sweet. So I think maybe starting from you, Mark, going this way now. So I think like each of the people here on the panel, they are focused on data, assets, interoperability, focusing on one of the problems in the chain. So maybe starting with you, what specific problems, each of you are trying to solve?
So Pith product, it's like arguably price feeds for DeFi app. The big problem is developers pick various different chains. You have hundreds of chains now. And how can you, let's say, sell your product, here price feeds, to like many different people that use very different technicalities and technical like chains, etc. So very much like the whole idea we had was like to try to make the protocol as generic as possible so that it can be seamlessly used, like whether off-chain or on-chain. And on-chain, whether you're on an EVM, SVM, MoveVM, ZK chain, arguably you get the same product available to you without like even obfuscating all the details. You just get what you want, price feeds updated on your chain.
Come on, yeah.
Sure. So I think the big thing we're solving at Stellar is the problem of access. So I think that it's easy when you're in Europe or or in the US to forget that actually getting in and out of crypto is really difficult around the world. And in order to actually get utility from this technology, in order to grow the pie rather than kind of like shift funds around within the pie, we need to make sure that we have a robust set of last mile solutions for people to go in and out of crypto. And so at Stellar, we've been around since 2014. We've really focused on building this global network of interoperable on and off ramps. We call these the anchor network at Stellar. And these allow you to go in and out of crypto in different regions. One of the biggest anchors we have on the network is MoneyGram, that actually allows you to move from USDC on Stellar to cash in your pocket in more than 400,000 agents around the world. So really allowing new people to get into the space.
So the main problem we focused on solving is how to make let's call them non-smart chains interoperable. So how to allow XRPL holder to do something in DeFi, how to allow a Bitcoin holder to do something in DeFi. And when we started solving this, it pretty quickly turned out that to properly do this in a really secure and non-custodial way, so that you're sure that A, nobody's holding your funds, and B, there's no government that can take them away or somebody can accidentally lose them, you need to build all these data protocols on top of this. So we kind of found out that with these data protocols, you not only can just bring other non-smart assets to chain, use them in a normal DeFi situation, but you can also empower the existing apps to use crypto in a way that it was always meant to be used. So use crypto to allow people to interact with other things, but bring them Web2 data, bring them something to settle on an insurance, bring them some data about a football game and allow them to make a prediction on top of this. And we really went full deep into this security aspect. So if you're choosing a blockchain, if you want to make sure that things are safe, secure, and you're not trusting anyone, you have to make sure that this whole chain of trust is really as strong as the weakest link, and that the weakest link is properly secured. So this is the solution. This is what we're providing.
So Relay, I think, can be boiled down into two terms: speed and ease. I think, your major routes tend to be the cheapest and fastest if you go to relay.link and test it for yourself. But I think on the other hand, there's an undercurrent of reliability where that ease factor, historically bridges run into issues with either RPC providers, liquidity issues, etc. And you could just be kind of dead in the water unless you automatically provide refunds, have a robust support system, things of this nature. And, that surfaces in the front end app that 35 to 40,000 users use daily, but also in partnerships in how we're integrated in OpenSea and making it super easy to cross-chain purchase or mint with one click. And I think continuing to push forward a better UX experience for all users continues to kind of open up this funnel, bring more people into the space, and ultimately, rising tides raise all boats.
Awesome. So very interesting, unique problems like each of the platforms is solving. So maybe again, today's multi-chain day, we have so many chains that raises the question of composability, right? So maybe starting with you, Pat, like how you make sure that like for each of you, your infra is composable, works with the differences of the different stacks.
It's a great question. And I think we are also, I'm slightly biased, obviously being a Relay, but because we were a bit of a late mover, we've only been around and on the market for about a year and 3 or 4 months, allowed us to take stock of a lot of the trends within the space and not necessarily commit ourselves to one standard, making sure that we kind of, enable optionality for both builders and our users, but, promote composability as different standards, kind of come to market, that we're able to support them based on the needs of our users, whether they are builders or projects themselves or simply for our end users. And so simply put, we are chain agnostic, we're standard agnostic. We're here to support everyone and really just make that access as easy as possible.
Philip?
So I came from an engineering background. And a very big problem that you usually have in this is, we can build the best bridge, we can build the best multi-chain hop, we can build the best this thing and that thing. And it's really difficult to get yourself in a position to say no, but things like this already exist. So within the composability space, we pretty much try to adopt as many of existing technologies, existing providers, to make sure that people are used to it, people know how to work with them, and the due diligence is already done. So we've successfully integrated Layer 0, for example, some other bridges, and want to keep our focus just on the core things, even though the engineering team is always, no, but our bridge could do this much, much better. And I think we'll come to this a few more times today. The user experience, the user knowledge of an existing tool and an existing solution to, just to be blunt, to solve this problem of 100 different chains where you can do a bunch of different stuff is a really big one. And further fragmenting this thing can be only more and more problematic. So we try to be really concise in making sure that existing solutions that work, that provide enough capital that people know how to use them, and have the all existing tooling and great tooling available are used wherever they need to be. And then the rest is making sure that our data can be switched to another chain, but the liquidity can flow through existing liquidity pathways because it's just much more efficient and easy to use.
So, like I said, access is kind of like the big value prop of the Stellar network. And last year, we launched our new smart contracts runtime, Soroban. And what we're seeing is that in the Stellar ecosystem, there is this thriving use case of basically kind of like cash to DeFi, where you can, in the kind of like the same wallet, move all the way from like cash in your pocket all the way to a position in a DeFi protocol. And what we're seeing is that this is slowly becoming more and more reality in the cross-chain universe as well. And so our contribution to this is basically, we're trying not to be Stellar maxis in the sense that it doesn't matter if you're a Solana wallet or if you're an Ethereum wallet. We're happy to help you integrate these access ramps, become, have your wallet become like a multi-chain hub, and we're seeing this happen. For example, there's one wallet in the Solana ecosystem, Decaf, that added support for Stellar in order to get access to the MoneyGram integration, and we're seeing them more and more active in Stellar. And I see this across the ecosystem. So whenever a wallet is looking for access, adding Stellar is kind of like a go-to, and then suddenly you realize, oh, there's all these other great things that are happening in this ecosystem that I can tap into now that I'm part of it. And so really a lot of it is like in the messaging and being kind of like more welcoming to other ecosystems.
That makes sense.
From this perspective, I think we mostly rely on shoulders of other people in terms of composability. I think the most exciting thing I've seen recently was from Base end. I think Base now you can launch like chains on top of it, and they enabled. And I mean, the OP Superstack is very big onto interop between the L2s, and by interop, it's not just about liquidity, but any type of information that can flow. And in relation to Pyth and Base, now you actually have a protocol that runs its own app chain, settle on Base. Technically, he could look to get a Pyth deployment on its own app chain, etc. But with Base, with this interop, he can actually read data or like update data on Base, then read it on its own L3. So overall, like on the Pyth perspective, we've mostly like we have the other people doing the hard job. We just try to care on optimize, like in composability, like Pyth-wise, you'll have the same product regardless of the chain. So it's composable in this sense, but we don't have the hardest job with composability. It's all around bridge liquidity, DEX liquidity. That's arguably a nightmare. And things like OP interop, I think, is the way forward in improving the UX and everything.
Yep. And maybe from composability, kind of switching to more parameters. Usually like again, there is always kind of like a trade-off between like trust, security, permission, being permissionless, and the UX. So like maybe starting again with you. How do you guys balance each one of you these multiple parameters, speed, permission led trust versus user experience? Are there trade-offs like which you have to give up?
Oh, there's definitely trade-off. I mean, anything you do, you will have tons of trade-offs. So I mentioned even before, Pyth is permissionless to integrate. You pay as you go. You pay as you, let's say, update a price on chain. I mean, and we actually found this 6 months ago, a year ago, when you're like, okay, let's like start increasing the fees. Like the Oracle, the data publisher need to be more profitable. The problem is, let's say, two users of Pyth. One is a derivatives exchange on chain, the other is a money market. The derivatives exchange, assuming it's successful, will make hundreds of thousands of revenue of fees per day. The board ending, very little. And the problem we've seen, especially with Pyth, is we cannot discriminate pricing to these two guys because it's fully permissionless, fully established on chain. So we could actually have this perp DEX pay $10 of fees every time you use Pyth, and he would be able to sustain this, while the money market would just say, yeah, it's too expensive. I don't get that much value from the protocol. So arguably, being fully permissionless, fully on-chain is kind of one pitfall we've seen with Pyth. We'll suggest ways on how to resolve this. So stay tuned and look at the DAO forum. But yeah, that's a common issue we've seen.
Yeah, I think one interesting thing in that regard is the Stellar protocol itself. So the consensus protocol that Stellar utilizes is a relatively unique one, and its main currency is trust or reputation. So rather than having kind of like a proof of work or proof of stake where you kind of like delegate your basically security to either computational power or to actual cryptocurrency, with Stellar, it's like very unique. So it's very direct. So every validator has to configure their own set of other validators that they trust. And through this kind of like recursive voting, basically a network of trust is revealed, and this quorum intersection of trust is kind of like the decision maker. So it's a very direct kind of like delegated voting. And the interesting thing there is that it doesn't depend on the price of any cryptocurrency. You actually get reputable validators, And I think there's been a lot of chatter recently on proof of stake and its faults, and a lot of people have been realizing there's this awakening that when proof of stake actually works, like in the Ethereum case, for example, then basically you just get this very complex way to choose like delegated validators, right? You look at the main validators, it's Coinbase, Binance, Lido. It's basically these very reputable ecosystem members. In other kind of like more nascent proof of stake ecosystems, these validators, no one actually knows who they are. And like we've seen in the Cedos hack in Sui a couple months ago, they actually can make decisions that are worth hundreds of millions of dollars worth of governance decisions, and no one actually knows who these validators are. So I think that Stellar is very unique. The configuration is a bit more involved, but you get a lot more kind of like reputable consensus possibilities, and that is also something that institutional players really care about as they come into the space and they're trying to figure out, just a second, who is actually making decisions in these protocols.
I kind of have to agree here. So at the end, safety is always social. I mean, be it proof of stake, be it proof of work. I mean, every time a hard fork happens, we kind of have to decide which of the forks is correct. But at least in my opinion, this question between compromising UX and compromising security, you have to be very clear, and you have to be very clear with yourself to know which aspects of the stack are just not there to be compromised. So specifically when you're designing an architecture, you have to know what your limits are, you have to know what the limits of your network are, and at that point, you don't make any compromises related to UX. Yes, it sucks at some points, but you have to be sure that you're building things that can scale at least times 10, and not have this, oh, this is a nice problem to have when we're going to scale and we'll have to solve this security problem. Yes, but at that point, you're too late. I mean, there's real money involved. So there are some aspects of the stacks when you can't compromise at all. And there are other aspects when you have to be very clear with people that, okay, we're going to build this, and there's a tooling that we know needs to be prepared. So there's wallets. We know that there's a huge problem with how do you go multi-chain related to wallets. But I think all of this periphery is crucial to fix. So I don't know, when we're looking at internet, the dial-up was pretty much just stones, ones and zeros, and we've built a lot of things on top of that. I just hope we won't have to build 7 layers of abstractions on top of this before I can get my picture of cat.
So maybe like just follow up on that. So specifically for Flare, like anything you guys prioritize that, hey, this is something which we need to have.
Specifically this validator set. So getting the data is as important as building a new block. There is no compromise here. So the data provider has to be a block builder, and block builder also has to be provider for FDC data, period. So there's no other way to be in the system. You have your whole stake composed in this. Your rewards depend on you doing all 3 things. So that's the baseline. Yeah, that means that onboarding validators is difficult. That means that there's some cost associated with this. That means that there's an engineering work to be done. But if you don't have this foundation, anything else you build on top of this can be shaky. So this is the thing that we explicitly did not compromise on, and we make sure that this works. Yeah, it poses some problems and so on, but you have to be clear that this is the building block. That's it.
Yeah.
So I think to go back to the speed and kind of ease conversation, not to, continue diving deep on it, but API side for builders, make it super easy to, permissionlessly integrate an API that gives you access to 87 different blockchains, thousands of tokens, and all of our liquidity. And then on the builder side, no KYC, or on the rather retail side, no KYC, super, super easy intent-based bridging, which means you're also kind of, taking a different approach at the security layer. I think on the reliability side, for those of you that don't know, Relay actually spun out of Reservoir in the many years that we kind of spent building NFT infrastructure, powering the likes of Magic Eden, et cetera. And so we have kind of this history of building, infra that is notoriously kind of challenging. And on any given day, our capital efficiency is somewhere between a 5 to 7 to 1 ratio, which means we just have to approach things differently, I think, in order to kind of support the multitude of chains, partners, and users that we see on the front end. And so, I think that historical nature, being a late mover and taking a different architectural approach, has enabled us to be very, very, performant across the board.
It is worth mentioning. Like, I think Pat's perspective is really interesting because it's, I think, these like intent-based bridges have basically completely taken over the space, like you said, because it's kind of like, definitely the user experience is better, cheaper, faster. Um, there's definitely, a centralization aspect to it. And I think we're seeing this not only on bridges, but kind of like in L2s, although we're seeing a step back from that. So I guess my question to you, Pat, is like, do you think this is this is sustainable, and are we going to keep seeing this kind of like, uh, kind of like give up a bit on decentralization in favor of user experience?
It's a great question, and I'm so glad you asked. Um, in approximately 2.5 weeks, I am happy to say, and 2 weeks is obviously a classic joke within our space, but like literally within 2.5 weeks to 3 weeks, we will decentralize our solver network and bring in a new model. And I fully agree that we're hitting a limit. Like, although we are incredibly capital efficient, it still does, create barriers for us in certain aspects. And, to be honest, I've wanted to go and support Stellar for a long time. And I think this is the path to get there. So very excited to kind of roll that out and really appreciate the question.
Okay, did you just announce that Stellar is coming to Relay?
No, but maybe alluded to the fact that we really do want to pursue this.
Good.
Awesome, guys. Yeah, so let's spice it up a bit. So, like, each of you is kind of looking at different solver networks, payments, synthetic assets, data. So maybe let's do hot takes, like quick 60-second hot takes on what's the most happening stuff on DeFi right now. Maybe starting with you, Pat. Yeah.
I honestly don't want to hear anything more about interoperability standards. Like, it's so overblown and overdone, and I think it really takes us away from the point that, like, we're not really welcoming a ton of new people while we're churning a lot of people out because of bad experiences, stuff along those lines. And I really do think we need to focus on, that UX piece and like making, it easy as possible for both users and builders. And for me, and maybe this is something related to how I came into the space, but when I first came in, it was impossible. Like, there was no Gabby Goldberg reading list. There was not a lot of documentation or information written for non-technical people. And a lot of the people that we want to welcome into this space are in a similar, mindset where we need to think about the naming and approach. And somebody joked to me earlier, like, dank sharding. Like, what is that word? Like, am I supposed to, intuitively understand that just by the terming? But my hot take is that we really need to take a step back, simplify things for this next wave of users, builders, et cetera, that we want to welcome.
I think we've really come a long way of being user-friendly. So with the Pectra upgrade, new wallets, ability to transfer stuff from smart accounts, we have guestless transfers, we have all this stuff which allows users to finally think about this as a tool, not something that I have to use because this smart guy somewhere told me that I need to use this because it's nice internet money. It's finally becoming this thing where it's nice to use, it's easy to use, and it's unfortunately faster than European banking settlement system. Come on, guys. It's Monday, and I would have gotten money today if somebody sent it to me on Saturday because it's weekend. Come on, the ATM is not working. But I still have to say that we must, at least at some points, not forget what's the core of this. Why do we really trust this? So the hottest take from a previous week, you have to know that the organization that's sharing some information is transparent, and you still have to know who's paying you. So, and I think blockchains really have to work a bit more on this, on making sure that there's transparency on what's happening, but also there's transparency on why we're doing stuff. And transparency is very clear here. We're doing stuff to make things easier for people, to allow them to do more. And yeah, we need to make sure that things work and that they're easy to use for my grandmother.
I think that in our ecosystem, we tend to talk a lot about trustless systems, and I think trustless is a lie that we tell ourselves and we tell others. And we should really be clear about the fact that that we're dealing with trust minimized systems, and following on this previous thread, like, different systems have different trust minimization properties, and we need to be very clear about this. TradFi institutions coming into the space, you tell them that these are trustless systems, they grab their head and they don't know what to do with themselves. And so, let's just be clear about this. Let's actually say who you're trusting, even if sometimes it's like an inconvenient truth, and remove this kind of like semantics from our universe.
Yeah, I kind of agree with all this. Like, sadly, at least according to me, we're going to have DeFi kind of rebranding into OnFi or just finance, whereby, I mean, do I know how Swift works? I don't. You still use your bank accounts. Most people don't care about it, don't understand it, wouldn't understand it. I wouldn't. So we kind of need the white knight that upheld like trustless system, decentralized protocol. But sadly, it's not performant enough so that you have those bringing more on-fi, just finance on chain, like better product or more optimized product. And so pretty much you kind of, we're just currently, I feel, rebuilding maybe a bit better, but the TradFi world on chain. It already adds some nice perks like transparency, accountability, maybe not, but at least you can see what happens. I wouldn't be shocked that over time you get NASDAQ to like all these trades to be done on chain. Like it will be their own US government chain, whatnot, but just so that it's not a black box anymore. But so I think, yeah, we're gonna lose DeFi, the cyberpunk ethos a bit, to, I guess, get more people on chain, get more value on chain, and sadly, we'll see the biggest change soon will be centralized and permission chain.
Yeah. And I know
I wouldn't say so. I think, sure, we're in early stages, but the first computers were punching cards. The first computers were slow. The thing that got us to the moon is less powerful than my watch. I mean, there's still a way to go, and we're seeing much happening in this industry. I think, sure, we'll have to go to specialized things, maybe to a bit more centralized chains. But I mean, even if you look, I don't know, a few years back with what the performance of Ethereum was, it was, okay, nobody's going to ever do anything on this. Well, we've come 3 years later and things are happening. So yeah, I think there's still a way, there's still development to be done, but it's much better. And we know that technology has always just progressed.
good. And I know, Pat, you mentioned taking maybe a step back from interoperability, but that's going to be my next question. Like, because so maybe starting from you, Mark, like how like how do you for each of you, how do you plan to bring different users, devs from different ecosystems, to make each of your products, platforms, like really designed to be interoperable, really designed to be for a multi-chain experience?
And I think what Pat said, we don't have to overload, oh yeah, this is my wormhole VA, like you don't care. We should, like nowadays, like we try to better our our docs, our developer experience with Pith. And actually you just have to copy the Web2 stuff. Like go on Stripe, they have the best docs. Do they talk to you about anything very technical? No. You can launch integrated from their docs. So think even before going to a protocol developer around, all right, this is the Pith proof that you verify here. It's to give them a very similar like environment that they already do in their company. Like whether I ping Bloomberg terminal, I'll be pinging Pith price feed endpoint. Like we have to build for them. Like they're not going to come. You have to kind of build what they already have. And after, yes, so on this more like interop on chain. So after it goes back to more like how the protocol gets designed. Are you able to ship something so that like I have my perp decks on chain A, B, and C. Can I use my same Oracle provider Pith the same way on chain A, B, and C? So yeah, this falls upon our laps as service providers. So I guess yeah, just thoughtful design, but don't like make it the dumbest possible. I think that's how you can just achieve good thing.
Yeah, and I know we are coming to time. Maybe like quick, short, like 15-20 second things from you, each of you. Yeah.
Yeah, just focus on the value proposition, and like I said, for Stellar, it's access, and try to grow the pie rather than bring developers from other ecosystems, because we're just shuffling around the same set of a few hundred developers, and we need to stop doing that.
Yeah, like he said, we don't need the million standard. So look, RPC is an API. Here's a piece of code that gives you this. Here's a piece of code that gives you that. And now a Web2 developer can onboard very easily. And we've seen quite good traction when changing our docs to this structure. So it's not you, it's an abstraction layer. Oh, the fun, interesting stuff is happening below, but you need data, 2 lines.
Yeah, no notes. No notes. Stripe docs, access, less interop standards, speed, ease. Just make it easy for builders and users. Grow the pie, and we should all win.
Awesome. I think maybe that's a good way to end it. So
Thanks.
thanks guys. Thanks for it.
Thank you.